As we take a look at Nvidia, I started this morning off talking about how it was trading so much higher on its blockbuster report. We are not higher. We are down almost 3% right now. And as it's performing, let's look at its more broad performance, not just today, before we dive into today. How has it been performing more broadly against the market itself?
Boy, what a difference 6 or 7 hours
Certainly
can make here. So when we do look at this sector here, Nvidia is not quite the outperformer it once was. It's actually underperforming the SMH semiconductor ETF. It is outperforming tech and the broader market in general, though. But to take a shorter term look at this whole semiconductor space here, this is a 20-day 4-hour chart here. You can see that we had our earnings, kind of give it this big boost to everything, but it all evaporated. Now we're actually doing worse. So a pretty big bucket of cold water. It seemed like perhaps Jensen Huang had a lot of comments about this whole AI bubble, but he was saying, still Nvidia is uniquely positioned to benefit from this transformational shift in the world of technology toward stronger, accelerated computational AI and all kinds of other aspects of this. So, these things can dissipate quickly. The initial reaction can be very severe. You might be surprised where we are a few months from now.
Oh, certainly, and Zed Francis was pointing out earlier in the show that this is actually within range of the move that was expected. It's not even as severe as the move that was priced in by options traders. So interesting to think about it in that perspective, but it's just such a massive company that its moves are felt so much more broadly in the markets. What I was hearing a lot today, and I'm curious to know if you saw any analyst commentary that echoes the same thing, is that while we are seeing some seesawing and now a move to the downside, still bullish on Nvidia sort of more broadly.
For the most part, yeah. The analyst coverage seemed to be mostly positive. We saw price target raises from Deutsche Bank, Bernstein, Susquehanna, Benchmark, and more this morning here. And we look at the chart, too. We can see that, things have been improving. For the most part, we had this bounce. We topped out 212.19. We didn't really break below any important supportive levels either here. We can see that this level near 177, we haven't really even tested that part yet where we had this double bottom. We are below our trend line, though. Our blue trend line has been broken. Our white trend line, now we are right back on the money with that particular line that we could draw here. So this whole big push to the upside, we topped out here at our old highs near 195. So just because it was in the expected move range doesn't mean it isn't a big bucket of cold water on your head here if you were bullish in this name.
Yeah, certainly was. And as we look at the options action, knowing this is a heavily traded name, what did it look like today?
I guess to give you a more, anecdotal example here, there's so much activity, it broke my spreadsheet that I used to look at it. So Nvidia is extremely heavy activity. Last time I checked, it's probably much higher now, actually. 5.8 million contracts changed hand, 66% calls. And we can see here that, the open interest for the month, 3.5 million, greater than many stocks, their total open interest altogether.
Row discussing Nvidia for FOMO because there's, very good reason for that. The biggest company in the world. But today's move has been pretty staggering. Marley Caden, of course, joining us in studio here. It has been one of the strongest earnings reports from Nvidia that I can remember in recent history, and yet we're still now down 1%, giving back all of our earlier strength.
Yes, we're seeing some seesawing here, and I think it's tied to this debate we had yesterday even about, is there an AI bubble? And I think there are still enough believers that we are in a bubble setup here, although all the guests that I spoke to on Trading 360 and everyone I've spoken to today about the earnings feels that this indicates there is not a bubble. Clearly, there are still naysayers out there powerful enough to be moving us to the downside right now, or perhaps some profit takers. We could be seeing that as well. But let's walk through the report because, it was really incredible. They jumped as much as 5%. Like you said, they've given up those gains. They're now down about 1%. They beat Wall Street expectations, and they beat them really pretty easily, provided a really strong revenue forecast for the upcoming quarter. That's amid what Jensen Huang called off-the-charts demands for their next-generation GPUs. So their third quarter earnings, their data center business, that was a really important important one, brought in $51.2 billion. That was better than estimates. And this quote really struck out to me, too. This was one that came across the wire pretty early on during the earnings announcements. The CFO, it came from Colette Kress. Blackwell Ultra is now our leading architecture across all customer categories, while our prior Blackwell architecture saw continued strong demand. So not only is the Blackwell doing well, their newest architecture, Ultra, ahead of their Rubin, is now their strongest architecture. So it's implying that with the release, each time it will become their new and best product. And so, that's what they want to see ahead of the release of their next round of chips here. And also, they did comment on China. It's important to touch on that, too. They said the revenue from those China-specific H20 chips was insignificant, but it does beg the question whether or not we might start to see a Blackwell modified chip, especially with the commentary that they are doing so well, that it is the leading architecture. We know the Chinese market likes to have the best in class. And if that is it, if it can be altered, if the approvals come through and they get the permits to sell that there, that certainly would only be to the upside for them. There's no downside to added revenue, and right now it's insignificant. As far as their overall revenue, it came in at $57 billion. That was a 62% increase from the period last year, better than expectations. EPS of $1.30 was a 60% pop year over year, also better than expectations. Nvidia only does a quarter-by-quarter guidance as well. So for the fourth quarter, projecting revenue of $65 billion plus or minus 2%, which was far better than what the Wall Street was expecting, about $62 billion in revenue. But just some really incredible commentary from Jensen Huang as well. Blackwell sales off the charts. Cloud GPUs are sold out. It's not, they're in demand. We don't have any. They are sold out. He also said we've entered a virtuous cycle of AI. The AI ecosystem is scaling fast with more new foundation model makers, more AI startups across more industries and in more countries. AI is going everywhere, doing everything all at once. And I think that in more countries part is an important part of this conversation, too, because this is a global AI story. This is not just Nvidia here. This is not a domestic play. This is a global conversation that's tied to far more than just our markets.
Yeah, so a couple things to add, and then I'll invite you into the conversation we had at the top of the show. First off, if you're a massive shareholder, you're the SoftBanks of the world, you're oftentimes handcuffed by when you can sell, not when you want to sell. And in these kind of moves, they do present the opportunities for those bigger shareholders to offload. It's not like us. Even if you had 10,000 shares of Nvidia, which would be a massive position as an individual, that's not going to do anything in the market. But if you got billions of dollars in Nvidia, that might have an impact. So some of that is, it does have the hallmarks of a bigger investor or handfuls of bigger investors, or maybe towards the end of the year, buttoning up some positions, taking profits, as you said. But we started our show along the way that you started this segment, which is this AI bubble conversation. And I think what me and Jenny settled on is we kind of feel the same about it, which is the numbers, the messaging was very optimistic from Nvidia, but you can't ignore this monster reversal intraday. I don't know if you have thoughts on that.
Yeah, it is interesting. Without any sort of evidence as to what is driving the reversal, I think it's just, it was such a good report. I think they felt so confident when it came out. But then I think when you get this digestion period, it's like Thanksgiving's coming. So let's talk post-Thanksgiving. Like, you feel great after dinner, but then you sit for an hour and you're kind of like, oh gosh, I really overate there. I don't know how great I feel. And I'm wondering if, some of the voices crept back in, the Michael Burrys, Peter Thiel, the SoftBank exiting their position. I mean, there were headlines that were not favorable towards Nvidia coming in. So yes, we got this really positive reaction. It was what everybody wanted and dreamt of, and even better, frankly. But when you sit and think on it, sometimes it's hard to drown out the voices, and then that could perhaps be some of what we're seeing here as well.
It's almost like you're describing FOMO, which is what this segment is.
Is that what this segment is?
Which is like, you have this feeling that's like a really emotional feeling that you want to dive in after these big numbers. And then the second it starts to go back down, everyone's like, oh no, I am like, this is the top. Oh my gosh.
I mean, it's true. And I'm trying to find really how to make sense of this move to the downside. I know that this happens often. We talk about earnings that are, as great of a report as they could have been, and it doesn't translate. And that's been the story, unfortunately, for Nvidia for, it feels like, several straight quarters. But for example, Seeking Alpha, we saw an analyst actually downgrade shares to sell on the back of this report, saying that it's valuation concerns, that the GPU space is heating up as far as competition. Nothing in this report would indicate any of that.
There are no numbers that indicate any of that. You know, I'm not an analyst. I don't presume to be an analyst. I'm not going to critique their abilities and the checks that they use to make their assessments. But the things that were flagged with every conversation I had with analysts going in, what are you looking for? We want their margins to stay low to mid 70s. We want to make sure their market share is not being eroded in any way. We want it to be north of 90%. We want them to have better than expected guidance. We want them to beat by a couple $2 billion. They did all of the things and then some that the street was asking for.
I mean, like data center, for example, those compute revenues rose 56% year over year and 27% from last quarter. I mean, this is a company that is roughly, say, $5 trillion. These are huge growth numbers from Nvidia. And I mean, I know that gross margin was, say, like 140 bips lower than it was a year ago. It did also improve 90 bips from last quarter. So I think that their improved mix, their cost structure, their supply chain management has been so brilliantly executed that I know that we're lower today and everyone's concerned. I still give all my kudos to Nvidia and Jensen Huang.
Yeah, I think what you guys are both highlighting is what makes markets so fascinating, which is if you're a fundamental investor and you're looking at this and you're saying, what is there not to like here? But if you're like a technical price-driven investor, you're saying, yeah, and it still wasn't good enough. That's what I think makes markets so interesting.
Yeah, and that's why we always say, I mean, hey, there's two different frames of looking at it, but I mean, at the end of the day, I can make the case all day long. And so, I mean, so could Marley that this was a great report.
Yeah.
Price matters. Look at the overall market. I mean, it pulled down the entire market right now. And I know we're only down about 1.5%, but it's definitely being felt from the nice day that we were seeing, at least.
Yeah, I said on an X post, it's lost 3 Starbuckses from its highs. That's crazy.
That's crazy. So, yeah, maybe I guess the argument could be made that all these valuations need to come down. But, hey, there's always an opportunity when we start to see at least things settle and not this, hype cycle that many were saying that we were in, which I disagree with.
So, Dan, NVIDIA's numbers really cap an earnings season where these companies pretty much did everything they were expected to do and more. Recommitting to the AI trade, essentially saying that they're still enthusiastic about it. Why is the market in general not really giving them credit for it?
Look, first, I think that was a masterpiece quarter, right? And I think any worries about the AI bubble thrown out the window in terms of fundamentally, when you heard from Godfather of AI, Jensen Nvidia, look, I think it speaks, and you've talked about a lot on the show, like worries about circular financing, like where this is going to go. Can the data centers going to get built? Is there capacity issues? Look, I just continue to view when you put the pieces together of the puzzle, as well as our 3 weeks in Asia, this is third inning, top of the third, one out of this AI game, and that's why I just think names like Nvidia. Days like today, you buy names like Oracle, Microsoft, Nvidia, because I believe this tech bull market has another 2 years left.
I mean, as a baseball numbers guy, we now know sometimes the third inning is your high leverage inning, where you got to kind of bring in the best arms and try to put down a threat. And I'm wondering right now if Nvidia's numbers, and I've been kind of puzzling over this all day, as great as they are and as much confidence as Jensen has about the next 4 or 5 quarters, you wonder if everybody can have equal confidence in the customers that are giving him all that money and allowing him to earn those margins on their spend, and when they're going to sort of get clarity about the payback.
Look, it's a great point, but I would just say, look, in the U.S., 3% of companies have gone down the AI path. Europe, 0. You look at, in Asia, ex-China, minimal, less than 1%. Sovereigns, Middle East, just starting. I mean, my whole point is that, right now, demand to supply is 12-1 for NVIDIA chips. And of course, AMD and others are going to play. But the reality is that we are still early. I mean, you're talking more money is going to be spent in the next 2 to 3 years than the last 8, 10 years combined. So I get some of the worries, but I believe the bears will continue to watch this AI party from the outside looking in as they continue to prove it out. And I think streets underestimating numbers anywhere from 15 to 20%.
Right.
Next to 12
But is that not the bull case for NVIDIA and the whole food chain for the infrastructure build out? Can it not also be the bear case for the Metas of the world and the Microsofts that feel like they're on this unending treadmill of having to spend, hoping that they get the return?
Yeah, and I think But I do think it's a little more than hope, because
Yeah.
the reality is that the use cases, if you almost put the pieces together, look at Palantir, look at MongoDB, look at Snowflake. So you see the use cases are exploding. Look, and it's an arms race that they are having to continue to spend on, and you're going to see the same with the Oracle. But I think Meta, we look out 12 to 18 months. This was a table pounder moment, just like we saw with Alphabet as a table pounder.
Well, I was going to get to Alphabet because that's a really fascinating situation, how it's gotten revalued higher, tremendous amount of sponsorship all of a sudden of this name that people really had a lot of skepticism about not that long ago. Now, their new model is getting raves, I guess, in terms of its performance, the new Gemini. And also, they did it, kind of with their own processors. So how does that play into the whole, Nvidia at the center of this question?
Sure. Well, Nvidia obviously fueling its centerpiece in terms of one chip in the world, but the reality is Alphabet, you go back 6-8 months ago, New York City cab drivers bearish on it, right? So it's one, AI that is ultimately going to destruct the model. The opposites happen. I mean, I think now you see Sundar and what's happening at Google, they're on the offensive. I mean, you look at what they've done with Gemini, this is just the start, because the reality is in Cupertino for Apple, who are they going in for AI? It's just a matter of time until they do the Google Gemini deal as well.
Yeah.
So that's why you've seen that stock at continue re-rating. Bull case $400. My colleague Scott Devin and I, we've done a lot of work. Look, I believe this is one. This is a name you continue to own, just still early days.
Is notoriously bullish. In fact, you had a hat that said Dow 100,000, and you gave us that some time ago. Tell me a bit about your thoughts on Nvidia.
I think that people have underestimated Nvidia going into the earnings. I think they've also underestimated the AI cycle, saying it's a bubble, it's about to pop. And those numbers were exceedingly impressive on every metric, and Jensen's guidance was fantastic. So I think that's going to dispel a lot of the concerns that people have had in recent weeks, making the market so choppy about the AI bubble and how long it can last. So very impressive numbers.
So the feeling now is that this, at this moment, gave validation. There's no AI bubble. We're in the sort of early parts of the AI revolution. When does that AI bubble talk come back?
I think, Nicole, investors should, and I've been guiding investors to say, look at some certain metrics. One is when price earnings ratios become significantly higher than growth rates. That's when the AI bubble is going to start to become vulnerable to popping, which is what we're all scared of. And we're nowhere near that. And a good example is Nvidia trading at 29 times earnings, growing in excess of 40% a year. So that's a really simple metric that you can do at home, or certainly we do professionally.
What are these about the 6 reasons of the tech bubble? What are we watching here?
Well, one is valuation, which I just mentioned. So you're going to keep an eye on that. That's still attractive. I think market sentiment, when markets get super bullish and people are overexcited, right now we're only mildly bullish, specifically since the consolidation. Cash levels. Investors are not fully invested, which is odd in this very good market. So that tells us there's not a lot of enthusiasm, and also leverage is not as high as you would see, let's say, at the end of the cycle in the 2000s with the tech bubble bursting. And one comment I would make is the circular financing. I know everybody's concerned about that. That's not healthy, but it's just begun to trend up. It's nowhere near where it gets at those periods where we peak out.
You also had off-balance sheet financing, new era narrative, and monetary policy. You want to comment on any of those?
Yeah, there is a narrative that it's an AI bubble and cycle. That goes with these types of enthusiastic periods. But again, the earnings justify the growth rates. And so as long as valuation stays in check, as long as people don't get too bullish and the leverage starts to come in, we think this could go on certainly through 26, 27, maybe even 28. So we've got a long way to go still.
And Goldman Sachs writing, we believe Nvidia has a sustainable model advantage over peers in AI training applications. There's just, Nvidia is something else. It's the behemoth of the AI names and has really shown that to be true here today. Final thoughts on the big picture, because you talk about monetary policy, and the question still is in the air about December and if we get a rate cut. And if we don't get December, do we get next year, the first half of the year, 2 cuts. I mean, people are waiting on cuts.
Yeah, that's about the only thing left on the headwinds. We've had a choppy market down from the highs, and I think a lot of that was government shutdown. Well, that's gone. We're back on. A lot of people were wondering about the AI bubble. I think Nvidia sort of dispelled the possibility that the AI bubble is about to end. So now we're left with Fed rate cuts. I think if we can get a cut, we go to 7,100 on the S&P by the end of the year. I think if we don't get that cut, I think the market might have a problem with it. So a lot of it, I think, Nicole, is going to come down to this data they're going to start to release about the labor market. I think if the labor market stays weaker, which it's been, the Fed cuts, we get a big Santa Claus rally.
Yeah, oh, there you go. And by the way, I mean, when we talk about Nvidia, when we say it lifts all boats, I mean, other things like CoreWeave were up, 10% in the pre-market, so that's been a winner. I ran Nebius, those AI cloud providers were gaining about 8% in the early going. AMD, another name, up about 5% in the early going. I'll see where they are right now. But it shows that that's the optimism here on Wall Street. Santa Claus rally. Final thoughts on taking anything off the table? I mean, is there any sort of sector? Are you going to stay with tech? Are you going to rotate anything? Any sort of end of the year rebalancing?
Yeah, I think investors, I've been trying to guide them to overweight the tech and the AI, the telecom. That's where the earnings growth is. That's what the market likes. But don't forget the financials. We're going through deregulation. That's a very attractive. The energy, electric grid expansion. That's another place like GE Vernova.
Yeah.
And don't forget to get your passport. Invest outside the U.S. Foreign stocks are up twice the U.S. stock returns this year. So there's a lot of great opportunities.